So last period we had seen the adjustment related to further bad debt, new provision for doubtful debt, and provision for discount on debtors. Okay. So provision for discount on debtor. So first it will shown on the profit and loss account debit side because it is a loss. Okay, next year only we will give that discount, but now we will keep some amount from the profit as a provision. Okay, that is provision for discount on debtor. Same like provision for doubtful debtor, it is calculated on the base of good debtors. It is calculated on the base of good debtors. So I will show that. Suppose in the question trial balance debtors, it is given trial balance 10,000. Okay, then provision for doubtful debt, provision for doubtful debt, provision for doubtful debt 1,000. It is old provision in the trial balance. Next, bad debt, bad debt 1,000. Okay, old provision, bad debt, debtors, trial balance. Next, additional information, additional information. First, further bad debt, further bad debt rupees 2,000, further bad debt rupees 2,000. Provision for doubtful debt, second adjustment, provision for doubtful debt, provision for doubtful debt at the rate of, suppose 10% on debtors, 10% on debtors. Next, third adjustment, provision for discount on debtors, provision for discount on debtors at the rate of 1%. Okay, at the rate of 1%. Suppose, okay, on debtors anything. So how to do? So debtors in the trial balance, debtors it is given provision for doubtful debt, old provision, then bad debt, then additional information, further bad debt, provision for doubtful debt, provision for discount on debtor, it is given. So how to do this problem? So bad debt, same like already we know, to bad debt 1,000, add further bad debt, adjustment 2,000, add new provision, for doubtful debt, new provision for doubtful debt. It is given that 10%, first provision for doubtful debt 10%. We know that on the base of good debtor, it is given in the trial balance 10,000 minus further bad debt into 10%, so 800. So 3,800 less old provision, less old provision for doubtful debt, old provision for doubtful debt. It is given in the trial balance of 1,000. So outer column 2,800. Okay, no change. Clear? From bad debt, add further bad debt, add new provision for doubtful debtor, less old provision, less old provision. Okay, next you have to calculate, I said, a provision for new adjustment, a provision for discount on debtor, that is separate to provision for discount on debtor, provision for discount on debtors, provision for discount on debtors. Okay, next item, provision for, everyone turn on your video, provision for discount on debtors. So it is also calculated on the basis of good debtors. It is also calculated on the basis of good debtors. From sundry debtor, we have to minus further bad debt and new provision for doubtful debt, that into 1%, that into 1%. Okay, that is provision for discount on debtor. Okay, provision for discount on debtor, how to calculate? On the basis of good debtor. From sundry debtor, we have to minus further bad debt and new provision. Okay, then we will 7,200 into 1%, 72. Okay, that is provision for discount on debtor on the basis of good debtor, on the basis of good debtor. From debtor, you have to minus further bad debt and new provision for doubtful debtor. Then we will get provision for discount on debtor, provision for discount on debtor. Then from balance sheet, from sundry debtor, you have to minus further bad debt, new provision for doubtful debtor, then provision for discount on debtor. Okay, that you have to minus from sundry debtor. Okay, from if it is in the balance sheet, how to do? How to adjust? From sundry debtor less further bad debt, less further bad debt, less new provision for doubtful debt, less provision for discount on debtor, provision for discount on debtor, provision for discount on debtors. Okay, then you will get the correct debtor. Okay, now we have to minus provision for discount on debtor. So now we studied how many adjustments? So 9 adjustment we studied. So first one, everyone turn on your video. First one we studied closing stock. So what are the two effects of closing stock? Karthik, closing stock.
Sir, trading account,
Trading
credit side. Credit side.
And balance sheet.
Asset side.
Okay. Next, outstanding expenses. Next, we studied outstanding expenses. Expenses which have been incurred during this year, but the payment has not yet been made. So if it is outstanding wages, effects. Aparna, outstanding wages.
So from the trading account, we have to deduct, and in the balance sheet, liability
Yes.
side.
Wages, outstanding wages, add, then balance sheet, liability side. Next, we studied third adjustment, prepaid expenses. Expenses which have been paid in advance. So suppose if it is prepaid insurance, effects, Anjo Sibi, prepaid insurance.
Trading account.
Trading account from insurance. What do we have to do? Insurance, prepaid insurance.
To
Minus. Then balance sheet.
balance
Where?
side. Asset side.
Yes, balance sheet asset side, prepaid insurance. Next, accrued income, outstanding income. Outstanding income means accrued interest on investment. Accrued interest on investment. Suppose if in the adjustment accrued interest is given, what we have to do, Hanna? Accrued interest. With interest, you add, then balance sheet which side, outstanding income
Asset side.
side. Okay, very good. Next, next adjustment is income received in advance. Income received in advance. Okay, income received in advance. Suppose commission received in advance is given in the adjustment. Commission received in advance. So effects. Aditya Satyan. Commission received in advance.
Credit side of trading and profit.
So first effect.
Credit side of trading and profit and loss.
Okay, profit and loss account from commission you have to deduct. Then balance sheet.
Reduce liability side.
Yes, balance sheet liability side. Okay, income commission received in advance. From commission you have to minus. Then the balance sheet liabilities side. Next, next adjustments. Depreciation. Depreciation. So depreciation, Femina, depreciation. Femina, depreciation.
Sir, it will be shown the profit and loss account debit side.
Profit and loss account debit side. Then balance sheet.
Asset,
Yes.
asset side.
Yes, balance sheet asset side. Okay, depreciation. From asset we have to deduct depreciation. Next one, further bad debt. Further bad debt. If it is further bad debt is given in the adjustment, then effects will be Atul. What we have to do? If it is further bad debt, then with the bad debt, what we have to do?
Sir, first of all, it will be shown on the debit side of profit and loss account.
Yes.
Then we have to add further bad debt to the respective
Yes. Then balance sheet.
it should be deducted from the
where?
debtors.
Yes.
And
Yes. From debtors we have to minus. Next, provision for doubtful debt. Provision for doubtful debt. Annette is connecting to audio. Aparna, provision for doubtful debt. Provision
So
for
it would be shown the trade. Sir, on the trading and the profit and loss account debit side,
yes.
we have to add the bad debt.
We have to add with the bad debt. Then balance sheet.
Balance sheet, we have to deduct it from the sundry debtors.
Okay, we have to deduct from sundry debtors. Then one more adjustment we have seen, that is provision for discount on debtor. Provision for discount on debtor. Provision for discount on debtor. So, Karthik, provision for discount on debtor.
Sir, debit side of profit and loss account.
Debit side of profit and loss account. Then
We should minus from sundry debtors.
we have to minus from sundry debtors. Okay, so now we will do the problem, numerical questions. First problem we will do. Okay, so we will prepare the on that basis we will prepare trading and profit and loss account and balance sheet. Okay, so look the numerical question 1. Prepare trading and profit and loss account for the year ending 31st March 2014. Okay, from the balances extracted of Mr. Rahulson's, and also prepare balance sheet at the end of the year, and also prepare balance sheet at the end of the year. So you have to look. So you have to look, first we have to look the trial balance, then we will look the adjustment. Everyone turn on your video. Hannah, Anjo, Anat. So first item, stock. First item, opening stock. Atul, opening stock. Where it will come?
Sir, trading account, credit side.
Okay. Trading account. Next one, wages. Wages. Anat, wages. Wages. Anat. Wages. Anat. Wages. Anat. I can't hear. Anjo, wages.
Trading account.
Next, salary. Anjo, salary.
Profit and loss account.
Purchases. Anjo, purchases.
Trading account.
Next, sales return. Anjo.
Trading account.
So next, sundry debtors. Karthik.
Balance sheet.
Next, discount allowed. Karthik.
Profit and loss account.
Insurance.
Profit and loss.
Rent rates and taxes.
Profit and loss.
Fixtures and fittings. Furniture.
Balance sheet.
Yes. Next, Anat, trade expenses.
Sir, trading account,
The next, bad debt.
profit and loss account,
Next, drawings.
balance sheet,
Next, repairs and renewals.
profit and loss account,
Next, traveling expenses.
profit and loss account,
Next, postage.
profit and loss account,
Okay. Next, Aparna, telegram expenses.
Sir, profit and loss account.
Next, legal fees.
Profit and loss account.
Next, bills receivable. Bills,
Balance sheet.
balance sheet. Next, building.
Balance sheet.
Okay. Next, Aditya, sales. Aditya, sales.
Trading account. Trading account.
Next, okay. Next, purchase return. Next, Hannah, discount received. Hannah,
account,
profit and loss account. Next, provision for doubtful debt. Hannah,
profit and loss account,
profit and loss account. Next, capital. Hannah, capital.
balance sheet,
Balance sheet. Next, bills payable. Femina, bills payable.
Balance sheet.
Balance sheet. Next, commission received.
Profit and loss account.
Next, rent.
Profit and loss account.
Okay. Next, loan.
Profit and loss account.
Loan, it is a liability. Okay.
Asset.
It's a
Balance sheet.
so balance sheet. Okay. Now, adjustment is there. 6 adjustment is there. First, commission received in advance. Commission received in advance. So what we have to do? Commission received in advance. So income received in advance. Karthik, first, commission received in advance. So,
Credit side of trading and profit and loss account.
okay, from commission, what we have to do?
We have to minus
And balance sheet,
liability side.
will decide. Next, rent receivable. Aparna, rent receivable means accrued rent, outstanding income, outstanding income. So, first,
Sir, trading an account credit side.
Oh, yes. With rent, what we have to do?
Then
Outstanding.
we have to add
Then balance sheet.
balance sheet. We are asset side.
Asset side. Yes. Next, salary outstanding. Salary outstanding. Outstanding salary. Atul. Outstanding expense. Outstanding salary.
Sir, we have to add
Yes. We have to add. Then balance sheet.
liability side.
Liability side. Very good. Next, prepaid insurance. Insurance prepaid. Insurance prepaid. Anjo. Insurance prepaid.
We should less with insurance.
Insurance. Then balance sheet.
Balance sheet.
Prepaid insurance. Prepaid.
Asset side.
Where?
Asset side.
Side. Okay. Next, it is given further bad debt, provision for the bad debt, further bad debt and provision for doubtful debt. What we have to do? Bad debt, further bad debt and new provision for doubtful debt. Anet. Anet left. Anet. Further bad debt and provision for new provision for doubtful debt. What we have to do with what we have to do?
The profit and loss account we have to add.
Yes, profit and loss account we have to add, and balance sheet.
Balance sheet we have to minus
From where?
from sundry debtors.
Okay, from sundry debtors we have to deduct further bad debt and new provision for doubtful debt. Next, closing stock. Closing stock. Aditya, closing stock. Yes. Then
Trading account credit
which
side.
side?
Trading account credit side.
Then
Balance sheet.
balance sheet. Which side?
Side.
Asset side. Okay. Next, depreciation on building. Depreciation on building. Depreciation on building. Hanna, depreciation on building. Depreciation. Unmute. Depreciation on building. First, where it will come? Depreciation.
Debit side.
Depreciation. First, unmute.
Debit side less.
Profit and loss account, debit side, and balance sheet which side?
Less.
Which side? Unmute. Unmute. Unmute and tell. Balance sheet, asset side. Okay. So then we will do the problem. So we'll start. Trading and profit and loss account. So heading. Debit. Credit. Trading and profit and loss account. Trading and profit and loss account. For the year ending. For the year ending 31st March 2014. So we know that what are the item will come in trading and profit and loss account and balance sheet. So we'll start. So first item in the trading account, Anjosibi, first item,
Stock.
to opening stock, to opening stock. So it is given in the trial balance 50,000. Next item, Aparna, after opening stock,
Sir, wages.
after opening stock. Next item, before wages,
Sir, wages. Wages.
before wages.
Sales. Purchase.
Okay, two purchases, two purchases, 1,75,000. Here purchase return, it is given in the credit side. So less purchase return, less purchase return. 2,000 it is given. So 1,73,000. 1,73,000. Next, wages. Any adjustment related to wages? No. Same amount. To wages, 3,000. Wages, 3,000. Wages, 3,000. Wages, 3,000. One thing you have to remember, trade expense is profit and loss account, not trading account. Okay, trade expense, it is related with the trade sale. So it is which one? Profit and loss account, not in the trading account. Clear? Trade expense, that is profit and loss account. To wages, 3,000, no adjustment related to wages. Next, any other item? No item, no? Any other item? No. Then credit side, by sales. By sales, 1,80,000 less sales return, less sales return, 3,000, less sales return, 3,000, 1,77,000. Next, we know that one adjustment by closing stock, by closing stock. It is given in the adjustment 32,000. 32,000. Okay, so now we will calculate. So which side is more? Debit side is more. Debit side total. Anyone? Debit side total?
2,26,000.
Yes, 2,26,000. 2,26,000. Balance amount we have to write by gross loss C bar D. So difference amount
17,000.
17,000. Okay. Then to gross loss B bar D. 17,000. Then we will write profit and loss account items to salary. You have to look any adjustment. Yes, outstanding salary is there. So to salary 8,000, add outstanding salary, add outstanding salary 1,000, 9,000, 9,000, outstanding salary 1,000, so total 9,000. Next, discount allowed, no adjustment to discount allowed. $1,000. Discount allowed 1,000. Next, insurance. Insurance, one adjustment is there. Prepaid insurance. To insurance 3,200 less prepaid insurance 800. $2,400. Okay, insurance less prepaid insurance. Next, rent rates and taxes, no adjustment. Rent rates and taxes, no adjustment. You can write the same amount to rent rates and taxes. To rent rates and taxes 4,300. 4,300. Next, trade expenses, no adjustment to trade expenses. Same amount 1,500. Next, bad debt, that we will write because adjustment is there no. Next, repairs and renewals. To repairs and renewals, no adjustments. Repairs and renewals 1,600. Next, traveling expenses, no adjustment to traveling expenses. Traveling expenses 4,200. 4,200. Next, postage, no adjustment to postage. To postage 300. To postage 300. Next, telegram expenses to no adjustment to telegram expenses. You have to look any adjustment. If it is not there, directly we can write 200. Next, legal fees. To legal fees, no adjustment to legal fees 500. Okay, so debit side is over. Bad debt we will write. Okay, bad debt we will write. Then you have to look the credit side by discount received. By discount received. By discount received, no adjustment 500. Next, provision that is related with the bad debt, capital bill payable, commission received. So one thing you have to remember, commission received adjustment is there. Commission received in advance by, so commission received, by commission received amount it is 4,000 less less commission received in advance. Less commission received in advance. Commission received in advance. 1,000. So 3,000. Commission received less commission received in advance. Next, rent it is given. Rent also, this credit side adjustment is there. Rent receivable. Rent receivable means income, outstanding income. Payable means outstanding expense. Okay. Receivable means outstanding income. Outstanding income. Rent 6,000. Add rent receivable means accrued. You can write accrued rent. Rent receivable 2,000. So 8,000. By discount received, by commission received, adjustment is there. Commission received in advance, that you have to minus. Next, by rent. By rent, then rent receivable is there, that is accrued rent, that we have to add. Okay. So now we will write bad debt adjustment. Bad debt. Any doubt? Atul, any doubts?
No, sir.
Okay. Aditya, any doubt?
No, sir.
Okay. So next, bad debt. So to bad debt. To bad debt, it is given in the trial balance 2,000. Then adjustment, add further bad debt. Add further bad debt. Fourth adjustment, further bad debt 1,000. So 1,000. So 3,000. Add new provision. We know that how to calculate new provision for doubtful debt. For doubtful debt. From debtors, debtor, it is given in the trial balance 82,000. 82,000 minus further bad debt into percentage, it is given doubtful debt 5%. 5%. So 4,050. So 7,050 less old provision. Old provision for doubtful debt. Doubtful debt. It is given in the trial balance 2,500. Okay, 2,500. Okay, so 5,050. So that you have to write. What time is over? 4,550. 4,550. 4,550. Time is over. Okay, so okay, now time is over. So next video we will continue. Okay.